investors have reason to be bullish on Meta. Meta Platforms Inc. FB beats on revenue with a miss on earnings, and it was due to a huge spending budget on the new metaverse platform. Meta slightly missed on EPS by only 5% and was able to make a bit of a beat on revenue for the quarter at $33.67 billion versus $33.4 billion estimated. However, even as it takes a large drop today for a company of its size in the U.S., here is your opportunity to reap the growth benefits Meta has to offer. Meta reported that revenue surged 20% for the quarter, and costs did jump to 38%, which resulted in a year-over-year earnings decline. The decline was caused by a very large investment in R&D. If management could have reduced what is spent on metaverse, spending it likely would have also beat on EPS. Total fourth-quarter revenue came in at $33.7 billion, up 20% year-over-year. Advertising revenue increased 25% as businesses continue to allocate their ad dollars to Meta's platforms. The monthly active people count increased to 3.59 billion during the quarter, from 3.58 billion in the previous quarter and 3.3 billion the year before. Average revenue generated per person increased 9% from last year and 15% from the prior quarter, indicative of healthy advertising demand. With increase in investments in metaverse and the firm's advertising offerings, operating margin declined nearly 5 percentage points to around 33% during the quarter. Where is the strength of the company? Facebook did admit that users were spending less time on the site, which affects advertising. But what the company has planned ahead for advertising in its new metaverse business model, it could take it to new heights. Before earnings were released, the talk among analysts was that tracking changes in Apple's app would affect revenue, and in fact it grew pretty nicely. CNBC reported macroeconomic challenges like inflation and supply chain disruptions are weighing on advertiser budgets. Meta Platforms' near-term uncertainty is high due to challenges posed by video app TikTok, ad revenue issues linked to Apple's iPhone device tracker, and softer ad demand. But the company should be able to execute through these challenges, Morgan Stanley said in a note Thursday.